Now we start in South Africa. Its Reserve Bank has left interest rates unchanged at its second meeting of 2017. At the January meeting, the bank signaled that it could begin raising rates again if higher oil prices, or of course a weaker rand, caused inflation to remain outside the bank's target range of 3 to 6%. Now, latest data shows CPI inflation slowed down in January, with food inflation down to 9.9%. Of course, after being in double digits since April last year. Now, farmers are anticipating the second biggest maize crop on record and a resumption of exports. Oil prices have fallen and the rand had enjoyed a strong run of late. However, the rand weakened sharply after President Jacob Zuma recalled Finance Minister Pravin Gordhan from an international investor roadshow, leading to fear that the fight for control of Treasury was entering the endgame.
Further to unfolding developments until a greater degree of certainty and confidence is restored. The growth outlook remains disappointing, and the MPC is concerned that increased political uncertainty could impact negatively on private sector investment and household consumption expenditure, and further undermine employment growth. The risks to the growth outlook are therefore assessed to be on the downside.
Well, Sumitra Naidu now joins us in Johannesburg with some insight into today's decision. Sumitra, as always, you're welcome to the show. Now, Sumitra, back in November, we know Governor Khanyago said the Monetary Policy Committee may be close to the end of their hiking cycle. What do you make of today's decision?
Well, that's right, Uche. At the same time was the U.S. election and the first signs of the severe drought tapering off. And since then, we've seen the strengthening of the rand, and together with a better outlook for the agricultural sector, that helped to improve inflation forecasts. Some economists even felt that there was room for a rate cut, if not at this meeting, but possibly at the next one. Inflation is set to ease further and come back below the 6% target. Food inflation in particular has dropped to just under 10% from 12% in December. However, the last few days has put a real dampen on the forecast and possibly pushed the MPC's deliberations in a different direction. The decision today was not a unanimous one. One of the bank's deputy governors argued for a rate cut, but we heard the governor raising his concerns about the political instability and the impact that's already having on the currency, and if there's more, which is likely, how much more strain that would cause on the economy. Considering all of this, it was a cautious approach, and most analysts believe it was the right decision to keep rates on hold today.
Now, Sumitra, you did mention we saw inflation ease in February to about 6.3%. Is the Reserve Bank revising their inflation forecasts, of course, to reflect the recent developments politically and, of course, economically?
Well, not officially as yet. It said the bank said that the risks to the inflation outlook is moderately on the upside, mainly due to the high degree of exchange rate uncertainty that we're seeing. But overall, inflation forecasts are showing a decline. Consumer price inflation is expected to average 5.9% this year. It's already improved from January when it came in at 6.6%, now 6.3%. And the bank says there are no significant demand pressures impacting on inflation.
Now, Sumitra, looking at the rand, we're seeing it continue to remain sort of a prisoner to short-term uncertainty, both on the local front and globally. For example, such as renewed fears of another cabinet reshuffle in the country. How did this reflect on today's decision?
Well, I think it was the first time that I heard the governor being so vocal at an MPC meeting about the political situation. As the governor, Lesetja Khanyago, delivered that decision today, he noted that the uncertainty is creating a number of risks while inflation is easing as expected. He said this could change very quickly should there be any major political moves. Of course, referring to the situation with the finance minister. If he's removed, it's expected this will hurt the currency severely. The governor also said the growth outlook remains disappointing, adding that the political uncertainty could also impact negatively on private sector investment and household consumption. and further undermine employment growth. So very concerning comments coming through from the governor today, and of course that I'm sure made up quite a big part of their discussions as they got to this decision.
Well, many thanks to Mitra for those insights. Sumitra Naidu joining us there in Johannesburg.